please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Right, first up, let's take a look at the Asian markets. Remember, yesterday Wall Street recovered some of the losses that we saw on Monday, so 350 points on the Dow. The Asian markets, however, by and large mixed. If you take a look at the Nikkei, that one is up about 0.4%, outperforming in an otherwise weakish-looking Asian screen. The dollar-yen absolutely flat still, a little weaker than what we saw in yesterday's trading session. The automakers in Japan doing fairly well. In the Korean markets, though, it's the steel industry that the shares of Korean steel companies, they're taking that index lower. So POSCO, for instance, is down and dragging the Kospi lower by about 0.3%. The Taiwanese index down by about 0.2%. The SGX Nifty, however, is indicating a flattish sort of start as far as our markets are concerned. Remember, yesterday we saw a bit of recovery in the last hour of trade. The Nifty recovered about 0.3% in the last hour of trade. SGX Nifty absolutely flat. Let's see where we go.
Okay, so flattish start is what the SGX Nifty suggests, but the US markets actually ended in the positive territory yesterday as technology shares cut sharp losses from the previous session. Now, the three major indices ended higher after a choppy session as investors looked forward to earnings season. Now, Amazon shares, which was down about 5% on Monday, jumped yesterday on the bet that criticism from President Donald Trump would not translate to policy changes. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
U.S. markets finishing higher, the Dow adding 389 points, the S&P up 32, the Nasdaq higher by 71. Small business hiring in March falls to its lowest level in over 7 years, while small business wages rose nearly 3% or 69 cents per hour. President Trump taking more jabs at Amazon, reiterating that he thinks the company is taking advantage of the U.S. Postal Service and that it should be paying more to ship its packages. That sent shares of Amazon lower, but the stock then rebounded on a later report citing sources that the White House has, quote, no active discussions about pursuing measures against the company. Some seat shuffling at the Fed. John Williams will become the new president of the New York Federal Reserve, a pivotal role in helping set the Fed's key funds rate. He takes over for William Dudley. His appointment comes as the Fed is raising rates and reducing the size of its balance sheet. Williams formerly oversaw the San Francisco Fed, succeeding Janet Yellen in 2011. That's the action from the U.S. market. Back to you in Mumbai.
All right, that was the action from the U.S. market. But remember, as we head into the earnings season, here is some important opinion coming in from Richard Turnell of BlackRock and Edward Yardeni on the road ahead for the U.S. market, economic outlook, and the earnings season.
When we look forward, we think returns are likely to be lower than the returns we've seen over the last year or two. You have to recognize just how extraordinarily positive those returns were and how extraordinarily low volatility was. But what matters most to driving long-term returns is the economic outlook. And when we look forward, we see that economic outlook being positive. And importantly, we're seeing that being translated into strong corporate earnings, particularly in the US. So when we think about what's going to drive returns for investors, that's much more likely to be earnings rather than valuations. And that means US equities, emerging market equities look attractive places to be because that's where we see the strongest earnings growth coming through.
I think a lot of companies actually are going to report stronger numbers than the revisions suggested, simply because analysts couldn't really get the full guidance from companies. So now they're going to get hard numbers for the first quarter. And I think we're going to see something like a 16 to 17% increase in earnings this year. So I think the fundamentals will be paramount again.
Okay, that's the opinion coming in, but concerns surrounding global trade war continue to rumble on. China recently announced that it would be implementing new tariffs on 128 US products worth around $50 billion. In a CNBC exclusive, Seema Modi caught up with the Chinese ambassador to the US and began by asking him China's reaction to the tariffs imposed by the Trump administration. Here is a slice of that conversation.
We are against the so-called 301 investigation from the very beginning. And today's announcement is another step in the wrong direction. We will certainly respond accordingly. We will resort to the WTO, World Trade Organization, dispute settlement mechanism, and we will, in accordance with the Chinese laws, take measures to fight back, maybe with the same intensity, the same scale.
So how exactly will China fight back? I mean, the question of retaliation, we've already seen a new list of tariffs from China's side this week. Will we see more tariffs in the coming days?
Well, it will be announced in Beijing very soon.
And can you expand on what type of tariffs or sectors this could potentially impact here in the United States?
We will see how much the U.S. measures will hurt our economy, and we will fight back accordingly.
Well, what do you make of the list, the new list we got from the Trump administration? It's quite expansive, really focused on high tech, the semiconductor space as well. What kind of impact could this have on the Chinese tech industry?
I think it will have a negative impact, clearly, on Chinese economy, but it will also have a negative impact on the U.S. economy. Such protectionism will not protect anybody. It will not protect American workers or American farmers. It will not protect American business or American consumers. Actually, it will hurt everybody, including the U.S. economy itself.
But what is the Chinese government's response to these allegations that Beijing is forcing U.S. companies to transfer valuable technology as a condition of doing business there?
I think these accusations are groundless. They never give us specific cases of such accusations. But still, we are ready to have consultation with the U.S. side on any possible issues between us.
All right, but let's take a flight across to the European markets, where major markets closed lower amid continued fears of potential trade war as well as regulation for the technology sector. Remember, the European markets reopened after the long Easter weekend. They hadn't reacted to the Dow cut on Monday's trading session, so this was some catch-up cuts seen out there. Tech and financial services stocks, they were among the worst performers in terms of data that came in from the Eurozone. The Eurozone's IHS marketing manufacturing numbers fell to an 8-month low in March to 56.6. However, while the European markets closed lower, they did recover from the lows. At least the frontline indices recovered about 0.5% from the lows. The peripheral indices, the Italian index, for instance, as well as the ATHEX, both of them recovered about 1.5 to 1.6% from the low point of the day. The Italian index outperforming there. No big moves seen in the emerging market space. Mild green on the Russian index, while absolutely flat as far as Brazil is concerned.
Okay, so then let's shift focus to the currency space. Then the dollar index eased as mounting US-China trade tensions stirred up concerns for the global growth outlook. The greenback against a basket of currencies edged lower. However, the euro tumbled after a survey showed the Eurozone's manufacturing boom faltered for a third month in March.
In the world of commodities, crude oil prices ease from overnight levels. However, the focus remains on rising Russian output, expectations of a reduction in Saudi Arabian crude prices, which was offset by a potential slowdown in US production.
Okay, and in an unfortunate incident, at least 3 people are injured after a shooting at YouTube's headquarters in California. Police said that the suspect, a woman, was armed with a handgun and injured 3 people and died of a self-inflicted gunshot wound. Her identity has not yet been revealed. Well, back home on the Lal Street, the Nifty traded in a range but broke out in the last hour to end with gains of 0.3%. The Sensex rallied more than 100 points. The broader markets actually outperformed yesterday. The mid-caps and banks rallied more than 0.7%. But that was about yesterday. Nigel joins us now to get us all the market cues that are lined up for the day today. Nigel, good morning, over to you.
Hey, good morning, Anisha. Good morning, Mangalam. Well, things have been looking good in the last couple of days. We've started off the series. We've started off on a good note. Last couple of trading sessions have been good. 98 points on Monday, and yesterday, in fact, we backed it up with around 33 points. Well, Mangalam and me, we always talk in cricketing parlance. You know, April 2nd, the 98 was good. You know, the pitch was good. They came out there, the batsman, and he was hitting it out of the park, so it was good. April 3rd, that's yesterday's trading session. Well, the batsman had to come in there, get his eye in, you know, really focus on the ball, and then, in fact, toil for those 33 runs, and it looked good, really, because otherwise the rest of the globe wasn't doing that great. But we ended with 100 points from the recent lows. And in terms of the big gainers on the Nifty yesterday, ICICI Bank, that one did bounce back after the clarification that they put forth to CNBC TV18, and that really was the leader in yesterday's trading session. India Bulls Housing Finance as well did well, and Mahindra, those tractor sales numbers looked good. So all those stocks were the leaders yesterday. But yesterday was even a better trading session because some of those frontline stocks didn't participate. The HDFC Twins, L&T, they in fact ended in the red, and yet we put on 33 points. So I'll give a real thumbs up to yesterday's trading session, because between them, that's more than 20% of the index that didn't participate in yesterday's trading session, and yet we ended in the green. So pretty good going. And besides that, the advanced decline ratio as well did look quite good, because we had more number of stocks that were advancing in comparison to the number of stocks that were declining. Well, net, the institutions were buyers, because yes, the FIs, they sold roughly around 380 crores odd, but the DIs, they pumped in more than that. So net, we did have a positive buy number of around 100 crores, and that explains why we did have a bit of a rally yesterday. Well, intraday, we have only one indicator. That's the premium on the Nifty yesterday. That did come down a tad bit from what we saw in the previous trading session. So that told you that, in fact, there is some shorting at the top. And even the FI as well, they added close to around 7,000 short contracts. They unwound some longs. Now the long positions have fallen to only around 17%. I've never ever seen the FI, long positions down at around 17% odd. And they're buying options big time. They bought calls as well as puts. So brace yourself, there could be a bit of a swing of a few hundred points. The big Q is going to be the RBI policy. We get the decision tomorrow. So we'll keep an eye out on that front. In terms of levels, what are the levels we're looking at? Well, the 200 DMA, that's going to be important on the downside. That's a 10,186 or thereabouts. So that's going to be the important mark. And I'll also be looking at the Nifty Bank 200 DMA. So on the upside, that could be a bit of a resistance for the Nifty Bank. So the 10,186 mark, that's the crucial mark you should be looking at. And remember, the Nifty Bank has rallied close to 900 points in the recent low. SGX Nifty is indicating a more or less flattish start. So it'll be an interesting trading session after putting on a good 130 points in the last couple of days.
You said it, Nigel, 17% FII longs is something I haven't seen.
Ever.
So let's talk about some stocks then.
Yeah, some stocks that we should focus on in today's trading session. Obviously, you keep an eye out on the Nifty Bank, you'll keep an eye out on those frontline stocks. But besides that, well, AkzoNobel, they're going to be considering a buyback in the next couple of days. So keep an eye out on that stock. Zensar Technologies, big orders what they have won, so keep an eye out on that stock as well. IDBI Bank, well, the board has approved the issuance of some capital, but remember, this is just an approval. The news had come in earlier as well, so maybe that stock should be in focus. And another couple of smaller stocks, we have Dixat Transworld. Well, that stock, in fact, could be in focus. We don't normally talk about it, but they're going to be considering an acquisition as well as raising some capital. Jet Airways, they've purchased some they've purchased a couple of airplanes, so keep an eye out on that stock. And finally, we have two new listings today, ICICI Securities as well as Mindani. I'll come back later to tell you all about Mindani. That's a smaller one, though.
A panel set by the government has proposed some seminal changes to the Insolvency and Bankruptcy Code, the IBC as we know it. This could alter the course of resolutions under the NCLT. Ritu Singh is here with the key recommendations that have been proposed. Ritu?
Here are some of the key recommendations made by the IBC panel. Number one, limit the applicability of Section 29A to persons that are acting jointly or in concert with the defaulters. Second, financial entities that have acquired such defaulting assets under a similar insolvency proceeding should not be barred from again participating in a bidding process. Number three, MSME promoters will be exempt from the Section 29A in that willful defaulters will be kept away, but promoters of MSMEs, even by virtue of being, a non-performing asset, will be allowed to bid back for their companies. But this, remember, is only the exception that is being made for MSMEs, not for the others. The COC voting threshold has been brought down for various activities from 75% to now 66% approval required to pass various resolutions, whether it be liquidation or extension of the period. Very importantly, banks can now, the recommendations say banks should be allowed to withdraw IBC proceedings for a case that is under process if 90% of the voters of the Committee of Creditors vote in favor of this withdrawal. This is very important. Also for home buyers, they should be treated as financial creditors and be made part of the Committee of Creditors. Again, very interesting for cases like JP Infotech. Also, it says assets of guarantors to corporate debtors will not be in the scope of the moratorium that has been imposed. All of these amendments will be applicable will not be applicable retrospectively. That is to say, the older cases will not get impacted by these new guidelines, and several other recommendations, of course, also been made. But these are some of the key highlights from the recommendations. Now, of course, it is up to the government to accept or reject any of these proposals.
Okay, thank you, Ritu, for that. But we also spoke with a host of experts on the proposition made by the government for the seminal changes to the Insolvency and Bankruptcy Code. Here's a peek into what they had to say.
As everyone knows, this is a very new law. It's 16, 17 months now. And this is, so there are learnings every day. And as has been said, this is definitely, the architecture was that COC should be the ultimate decision maker and then, of course, get the stamp of approval of the NCLT. So I'm sure they will do the right thing. And all of us will learn from the process, because every day there is a new twist, as you can see in almost all the cases.
There is a recommendation which says that the word has should be looked at as is. So it's not past this thing. It is a status where currently at the time of making of the application, the disqualification exists. So they have dealt with this issue under 29E. The recommendations that the committee has given in the context of Section 29A very clearly deals with this issue.
All right, let's move on then. New developments in the alleged nexus between ICICI Bank CEO Chanda Kochar's family and Videocon Group's Venugopal Dhoot. The tax department has initiated a probe into the alleged irregularities in the loans given by the bank to the Videocon Group. Sources say the taxman has sent a notice to New Power Renewables, which was set up by Chanda Kochar's husband Deepak Kochar.
Okay, the department is believed to have asked New Power whether it availed any compensatory consideration for quid pro quo, and after CBI and Income Tax Department, the Enforcement Directorate is also believed to be planning to scrutinize New Power Videocon transactions. Now, sources say that the ED may look into these transactions for possible FEMA violations as well, and is likely to seek documents from New Power soon.